Hello and welcome to another update video about the DXY. Last video we also took a look at the longer time frame. In this video I really want to focus only on the short term again. So you need to, however, understand the context that we are currently, in my opinion, in a larger ABC correction. We topped in wave 1, that was back in October, here around $115. Then we've come down in the anticipated correction, moved into the support area, into the target area, bounced away from it, and now we have seen quite a bit of volatility. So we now need to understand where are we. So we're going to take a look at that in a minute, but we are anticipating here very shortly the beginning of a B wave. Now, if that means we go up now or we go down still to the $102 level, which is absolutely still likely because the market can use this entire white box, I can tell you that it has done what it needs to do. It doesn't need to go any lower. Yeah? I'm happy with it. We made that lower low the last few days that I wanted to see, so good. Now, if we now start that anticipated B wave, it will probably take most of January, maybe even February. B waves can be choppy. They can also be quite long. So just want to warn you that this could be a several week long at least corrective move to the upside, maybe even a couple of months before we then come down in a C wave, and that would be quite a strong sell-off in the end. Okay, so that's where we could land around the $90 area, maybe even $80 area. We looked at that in the last video, but at any moment I think we can see this B wave high start. And why is that? Because in this correction of the A wave, I consider this an A wave of a larger wave 2. We've got 3 waves within it: A wave, B wave, and then the C wave to the downside here, in which we've seen a wave 1, a wave 2, a wave 3, here a wave 4, and then a wave 5 down. Now, key breakout point that I mentioned to you to be able to say that the low is in, at least with a good likelihood, would be that $105.80 level. As you can see, we never broke it. I'm also not extremely happy with that structure to the upside. It looks very corrective. It's not a classical 5-wave move. Okay, it could be a leading diagonal where you have overlaps, but it's not a good impulse. Now, it has come down very impulsively today. There was some economic data that was released, some figures, so we've seen a bit of volatility and it's come down. It's now testing that trend line from above. So if that is retest, we see a bit of a bullish signal, maybe a bullish engulfing candle on the hourly or so. That could be a sign that we have bottomed here locally and we are going to move up, and that we are in this anticipated B wave. However, at the moment it doesn't show anything other than a tiny green candle. Definitely not a reversal signal, and normally I would expect with such an impulsive move down that we will come down even lower. How would we then construct all of this in terms of the wave count? Well, in the worst case, we would have to say that this is still the wave 4. Yeah, that all of this was a wave 4 in a very complex corrective pattern. And then we still have to see that wave 5. So it remains a little bit uncertain until we have seen really that break above $105.80, because as long as we are in this range here, you have to basically expect headwinds. You still see here sell-offs into the rally, and this is certainly not yet a sign of strength. I think we are in a bottoming process, but these are processes. Yeah. We have a double bottom here. Yes, this was a slightly lower low, which I wanted to see, but I already explained that in the last videos, in the last 2, that this was not as clear as I would like it to be. It was only very slightly below that low, which can always lead to a situation where we had here an A wave, a B wave, basically a flat pattern, and then here a C wave to the upside, or a WXY pattern. Probably better to count it like that because of the not very impulsive nature of this. Yeah, for example, here if we count this as a 1, 2, 3, 4, 5, even though it's technically possible, the wave 3 is too short. But yeah, either way, I mean, this is still not confirmed that the B wave has started. We had signals, but we have seen an impulsive sell-off again. So we are back to square one here and just need to wait for the first impulse to the upside to emerge. This was already looking good. Yeah, this could have been a wave 1 up, a wave 2 down. We talked about that, but then it sort of failed here, or at least, I mean, this could become something as long as it's holding now the low. to be honest, it should at least hold the 78.6% retrace. And that's exactly where it's now. So if it drops below $103.88, then yeah, probably the low wasn't in. If we're holding it, we can give it another chance because the 78.6% retrace is highly, highly relevant. So in theory, this could be a wave one here of some sort, even though it's not a nice one. But the wave ones aren't always nice, especially after a long correction. But we need to hold this. And the problem I have is this looks really impulsive to the downside. I have my problems with this, seeing this as an ABC. But let's see. As long as we're holding this support at $103.88, we can still give it another chance to break out from here. But if we break below it and sustain there, then we are most likely also going to see the $103.39 level break. And we could see finally this low in the $102 area that I've been talking about, because I said ideally we have target between 102, 103. But of course, as soon as we hit this support area, we need to be ready for a turnaround, which happened, but it's not yet a confirmed turnaround. So I will certainly keep you updated about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.